Now, what happens in that business?
Just to add to that, I think clearly if you can have structured deals, I think if you look at it, let's take merchant shipping versus say offshore services, particularly if you are looking at rates and other equipments, where you typically get 3 or even 5-year contracts. I think private equity you get much more comfortable because particularly if you are entering at a point of time that you have clear visibility that a lot of the investment can be recovered. And something like that you're talking about a joint venture with at least a significant capacity which is locked in for a period of time, probably that takes away some of the cyclicality. Those kind of structured deals, while it is not going to give you a significant upside, if you can put large amount of money to work at reasonable cost of capital, I think that is something that people will start to look at. Right? So I think it's important to have either through market, long-term contracts, as in the case of oil services, or through structured ventures where you have reasonable visibility of cash flow. It's something that will slowly start attracting.
I'd like to point on that, the world's largest bulk carrier, Star, with about 330,000 deadweight, right, is actually time charter for 25 years. Right, and there are deals, 3 and 5 year deals are very easy in shipping.
But not in India as much, right?
Yeah, but
starting to happen probably. But
yeah, but I can easily listen. There are even deals where you can do on base rate plus profit share. Right. So what you can do is you can have, like, I'm just giving an example, say the time charter rate for a certain vessel, the spot time charter rate is say $20,000. Right. I can even have a base rate of $15,000 plus 50-50 profit share between the charterer and the owner. Right. So actually my upside is that tomorrow if it goes up to $30,000 or $40,000, which happens in the tanker market very easily, alright, I could actually split that profit. So my upside actually could be much higher, and my downside is covered for 3 years, 5 years, even up to 10 years. In container ships, I can do easily 10, 12 years.
Yeah, I think if you look back at this whole industry, I don't know much, but my sense is this has been very entrepreneur, family driven because cyclicality and a lot of one is the operating income itself, then there is whole playing on the cycle, whether it's on the asset. So it's been generally a very entrepreneurial. Family type of business is starting to move to more disciplined, kind of seriously looking at cost of capital, structuring deals of this kind. I think that transition is starting to happen globally. In fact, we see, as Raghav mentioned, we recently did a deal for a company called US Shipping, where we committed, $200 million on a very structured transaction where the upsides are not significant. We probably make 20%, and if things really work out, we make 27%. Okay. But it's a very structured deal, where something similar to what you're saying, where there's a base, spot rate which is locked in, plus depending on the market movements, you get some upside. Deals like that is starting to.
These kind of creative deals are happening. As a matter of fact, the quantum of investment, right, in offshore, let's say in the rig would be $150 million, $200 million. Whereas in a lot of these deals, it could be as low as $20, $25 million, which it is some comfort level also. Okay, you're only putting up $25 million of the whole thing. And there are these creative deals. They are with major companies. It is possible. It's not impossible.
See, what we would like to know from the government is that we have not, unfortunately, had much interaction with the investors, the financiers rather. And we would like to know what is the bottleneck in the regulatory regime and what we can do. We are in the process of putting together the 11 5-year plan document, our advisory to the government. Yeah. And we would be very happy to take their inputs, people like you and around these tables. Yeah. So what we can do to improve our regulatory regime, which will give them more comfort, which will make them feel more secure, so that the finances flow easily and the cost of capital is.
No, probably, to quickly answer this question, see what may happen in the structured arrangements. Some of the ships may be actually owned by foreign companies. Now, the benefits which are some of these leased, what do you call it, BBCD, bareboat come charter demise. These kind of deals are not recognized. They are treated more like the lease deals, where the ships is actually in the foreign registry and it is just flying on Indian water. So some of these things where in a structured transaction, some of the assets may not be really owned or maybe in the Indian registry, but they may like to get some benefit because they are dedicated for a long period of time to Indian cargo. and it's serving the national interest. So what we can do is probably interact with few people, and we can share with you some sort of a white paper of what are the issues, and which will facilitate a lot of structured finance transactions much more easily than what is possible, and that's probably which can be attempted.
One of the formats could be the KG funds in Germany.
Yeah, Germany, yeah.
I think a similar model, I am not too sure, a similar model is happening in windmills here, where I find the people not connected with the industry are investing into windmills, and they get tax shields. So in Germany, I think this scheme has become quite
Yes.
popular. Whether we can
Yeah,
replicate that
to
scheme.
explain what is KG. KG is a sort of a partnership in Germany, and they get it's a limited partnership, so you don't get exposed to if things really go wrong. And a whole lot of professionals, 2 or 3 group of professionals, they come together, they get large tax breaks, and they buy the ships, and then eventually these ships are given to for management, and there are charterers who can manage it on a regular basis. So to create capacity, that's one way to do it, and that's a very good observation that India's lot of this windmill capacity has come primarily from that account, and that's a way to increase the tonnage. Yeah.
I think we did about 2 10-year deals. I think, I don't know whether they were the first in the cement sector in India in 99 and 2000. They are about 10-year deals for taking cement out of the power plant. It was LNT that time, and now it is a Ultratech, which is a very popular company. Now, having done this, we have this strategy, as Mr. Bhupendi said. Different groups, different shipowners have different strategy to go, and we also look at these stable cash flows within the group as one part. But we call them projects. What happens is, you have to, when you're looking at these 10-year deals or long-term deals, you can't just take the simple Panamaxes or Handymaxes or what is available, because the charter or the other side, the industrial, whether it's utility or it's a cement plant or a steel plant, they won't lock them in at a particular point in time. You see, if time in a particular point in time could be either favorable to the charterer or it could be favorable to the owner. So to do this, what we need to do is, you specialize the vessels or you custom made these, and hence the cost go up. So what I'm just trying to say, they don't become the standard assets, but they are value-added assets. So when you say that you are looking at stable cash flows, they will come at some price.
Okay, thank you on this. We will move on to the next section, that is ports and dredging. Now, ports is actually probably the biggest sector, and not many people have really understood what it means. It's an interface between land and sea. If you look at world's most major cities, they've all been port cities, and port is just not loading, unloading. There's a whole lot of activities which gather around it, and there's a very large externalities which get attached to the port infrastructure. And the private equity deals which have happened in India, maximum number of have happened in the port side. Gangavaram port is one example where Warburg has taken some stake. We have Pipavav port. We have with us Mr. Rajiv Sinha. He is managing director of Pipavav port, and there is a large deal which has happened. The port is controlled by Maersk. They bought over from. In fact, there were multiple levels of private equity which happened in this particular project. And Adani port is already talking to a lot of people, and I think there is a deal which has already happened. Apart from the port, also gives rise to a whole lot of other infrastructure like shipyards, the logistics connectivity, the CFS, the number of CFS which have come near JNPT. GDL is one example. All Cargo is another. There are some 10 CFSs. All Cargo again has been funded by New Vernon Capital. I think that's a private equity. GDL is funded by local financial private equity people. So port seems to be a very big attraction because of the business per se, as well as the externalities which come around the port side. The total investment that we are talking in port sector is close to be around $20–25 billion in next 10 years.